Good morning, RJ Baxter here with Choice Mortgage Group. You guys are not going to believe this, but there is a mortgage product that came out where they do not verify income or employment. I feel like I'm back in 2008 again. This is just unbelievable that they're offering these kinds of products again. Now, the reality is that the interest rate is higher on these programs, which makes sense because the lender is taking on more risk. And your buyer would have to have a stronger down payment and credit score. So they want to see strength in other areas to offset the fact that they're not verifying anything on their income. So this is something important to keep in mind, but this could help a lot of buyers out there that maybe you're having a hard time qualifying because they either don't have the employment history or they don't have enough income to qualify right now. So if you come across someone who could benefit from this, let me know, and I'd be happy to have a conversation with them to see if it might be something that fits into what they're looking to do. Now, on the interest rate front, I want to give you a quick market update. Interest rates remained level compared to last week. So it's about the same as this time last week, which is kind of surprising. There was a lot happening this week. We had a lot of economic data released. And the big thing this week was the Federal Reserve meeting, where they came out and said basically that they're not going to do anything with interest rates. They're not going to lower rates. They're not going to raise rates. And they talked a little bit more upbeat about the economy, that they think things are looking strong, probably based on recent GDP numbers coming out, relatively strong. So it has yet to be seen if that's going to play out that way, but that was the language that they took. And based on that, the market didn't really react much. They were kind of expecting that type of language and that interest rate decision. The other big thing that happened is President Trump announced the new Federal Reserve chair that will succeed Jerome Powell. His name is Kevin Warsh, and he's an economist that's more dovish, as we say, which means he's more accommodative towards lowering interest rates. He wants to do things to stimulate the economy. This is exactly what President Trump wants. He wants interest rates in general to come down. Now, we have yet to see how that actually plays out, if in reality interest rates come down because of this. And just a reminder to you, because I've been getting this question a lot this week, when the Federal Reserve lowers interest rates, that does not directly affect mortgage rates. This is a really important thing to know because the common perception is that the Fed lowers the rate, which means all rates, and that's actually not the case. The Fed lowers short-term interest rates, very short-term, like the overnight lending rate between banks, whereas think of a 30-year mortgage, that's based on a 30-year Treasury bond, which is a completely different security instrument than a super short-term rate. So hope that helps you guys out. Give me a call if you have any questions, if you come across anyone this weekend, and have a great weekend. Thanks a lot.